What is going on, everyone? Today I wanted to share with you stock news updates on two electric vehicle companies that I've been monitoring: Lucid Motors and Mullen Automotive, tickers LCID and MULN. Now, over the recent weeks in the month of February, we have seen the company's share price, both Mullen and Lucid's share price, just plummeting, right? And what's really driving the share price to drop so much? I'll share with you details on what's going on. Why is the company's share price plummeting? And do we see the horizon to come where there's going to be bullish signals moving forward, right? Because what eventually goes down will go back up, and we don't have a magic 8 ball to say that it'll either continue to go down or up. But from my perspective, let's say if you've bought in at a higher price, dollar cost averaging may be the best recipe for success here for return on investment potential. Now, let's say if you're new to this channel, please make sure to hit the thumbs up and subscribe to All I See Is W, where the goal is to gain on positive proceeds and lead with an altruistic mindset. Let's make some money with Lucid and Mullen Automotive. Now, first off, I wanted to share with you the overall price of Lucid. As you can see here, it went up by about close to 3%, hovering at the high $8 range. We know previously in the recent run up here back in late January, it ran up all the way up to $12, $13, and we've seen just a big decline now, right? I mean, from close to $13 now down to $8. The question is, will we continue to see the bleed out, right? Looking at it from a 1 month range, it's dropped by about 25%. I really think Lucid has a quality product here, and that's really what's driving the story, the branding here when it comes to being a potential competitor against the top known electric vehicle companies like Tesla. However, based on just where we see market sentiment right now, a lot of investors are looking to see value with companies that have positive return on cash flow with low operational costs. And currently we know that with Lucid, with the recent financial results release from the CEO, Lucid's just been burning money in terms of its cash flow burn rate, and the demand for Lucid vehicles has not reached up to par compared to what the companies initially forecasted. And this is what's really driven the share price down, increasing investor uncertainty with where the company is headed. However, if you look at it from a long-term perspective, I mean, Lucid is a company that's still in the development phase. Yes, it has cars on the road right now. According to the CEO, the goal is to continue to maximize and bolster its sales revenue and eventually roll out vehicles not only in the US markets but across the global markets as well, like in Saudi Arabia, in other areas like the Asian markets. Now, I wanted to share with you an article here written by Investor Place, where this person has provided perspective on whether Lucid stock is a buy, right? We know that Lucid just recently posted a quarterly revenue miss and another net earnings loss. And this is all based on just balance sheet, and this is really turning off investors right now. Overall, Lucid's capital position is diminishing, and the company produced a relatively small number of vehicles in 2022. However, on the bright side, we see an increase in production rate and throughput with Lucid vehicles, so that's a good thing. As we look at just overall with this article here, right, the Lucid stock declines just quickly, right? As it turns out, Lucid only produced 7,000 vehicles in 2022. This figure falls far short of Lucid's group original prediction that it would produce 20,000 EVs last year. For this year, Lucid's groups expects to produce 10,000 to 14,000 vehicles. But then there's credibility problem here. If Lucid didn't come anywhere near its original production target for 2022, why would investors put any faith in today's current forecast? Now, all of that may change, right? It really just comes down to how the demand changes. And let's say if the economy picks up, we don't know whether it will or not, then this will likely benefit Lucid overall. But one of the biggest downsides is just coming down to just poor sales and cash burn, which is causing a big detriment to the overall Lucid's balance sheet as of to date. Now, this article, even though this article suggests that Lucid stock is not a buy at this time, I'm going to have to take that contrarian perspective and disagree with that, because just based on the overall value of the company, I believe that buying low and selling high will really add value with positive return on cash flow. Yes, when it comes to investing, there's a degree of risk, so please make sure to take my information as guidance and do your own diligence when it comes to investing. However, buying low, selling high, dollar cost averaging is one of the recipes to win right now with Lucid. I don't think it's going to go out of business, no. So just with the recent news today, I mean, in fact, AT&T was chosen as the connectivity provider for Lucid Motors EVs. This is huge, right? Because we know that the connectivity for Lucid's full line of EVs will be for the US, Canada, and Mexico markets. This is great news because the strength of AT&T's network and the leadership in the connected car space are key reasons Lucid chose AT&T to connect the vehicles there. So this looks very bullish here, and this may be one of the driving forces that will allow for Lucid to continue to market its branding, right? Because connectivity is beneficial in all types of vehicles and gives owners the latest driving experiences. When we look at Lucid, we think of an extraordinary luxury vehicle, and being connected with AT&T, that just brings more investor confidence because of AT&T's just known branding. We know that with 95% of cars, it's expected that most cars will be connected by connectivity by 2030. So this is looking very good in terms of Lucid's technology and partnering up with the big company like AT&T. So this is great news to take in. Now, when it comes to upside here, I believe that in the first half of 2023, we can see Lucid break through the $20 range, right? I mean, we've seen it run 100% within the day, right? And there hasn't been any actual news that came out after the potential buyout of Lucid by Saudi Arabia public investment firm purchasing the remaining shares of Lucid Group. So any news, any press release can really drive up the Lucid price. And I remain bullish with this company here, given all of the negative implications with the financials here. Now let's shift over to the next EV company I wanted to share with you, and that is Mullen Automotive. As of today, Mullen dropped by about another 6%, hovering at the range of 22 cents. We look at a 5-day trading action here. It's dropped by about 17%. If we go back about a month, it's dropped 34%, where its high point back in early February was around a range of 42 cents. We know the CEO sold off about 15 million shares at around the price of low 30 cents, 34 cents, I believe. And most investors were feeling worried at the fact that the CEO sold off about 14 million shares of Mullen Automotive. And we know that the CEO was gifted those amount of shares, and that currently he owns about more than 100 shares of Mullen Automotive. What's really driving the overall price down, right? Well, it's just with the recent news of continuous dilution. We know that overall, Mullen's balance sheet, right? There's no revenue coming in at this time, right? Although we see these partnerships with Bollinger, Elms, eventually rolling out, the aviation partnership in the LAX airport, as well as having partnerships in Ireland to roll out its new EV vehicles there. There's just all these great milestone accomplishments, but what's driving the share price down, right? The fact that there is just negative implications with the share price going down, the CEO selling shares. Investors are becoming more worried, and this has resulted in overselling the share price, and investors are beginning to lose confidence. However, we know that there's companies like BlackRock, an institutional investor that owns a huge bulk of Mullen Automotive shares. In fact, BlackRock upped their quantity of shares in Q4 of last year. So that just shows positive sentiment overall. However, there's also negative implications, such as the continuous dilution. So if we look at this article here, I mean, overall, Mullen has continued to dilute the amount of corporate outstanding shares. I mean, back in 2022, Mullen had about 24 million shares, and now today it's close to about 1.7 billion shares today, and this is really what's causing a dilution to the price of each share, which takes away the ownership for investors. So what needs to happen, right? Well, we know that Mullen needs to continue to raise capital, right? Especially given that there's no revenue in place now. Now, when we look at Tesla, for example, Tesla back in 2006 and 2010, the company used almost 400 million in cash while generating less than 150 million in revenue. So we know obviously there's going to be, a net negative when it comes to scaling up operations, and this is where Mullen really has to execute on a way where they're able to survive the negative downturns with the economy right now, especially having different competitors in the EV market. But what's really unique about Mullen is the amount of patents that the company has, especially with Bollinger and Elm's patents with all of the different unique vehicles. So that's one of the good sides with Mullen, as well as having such a huge investor community, especially on Reddit and StockTwits. So really, this is what's helping build the confidence in Mullen. They actually have a branding and a story here to be told. Now, also one good news is that in March 7th, Mullen will be showcasing its B4 chassis cab at the Work Truck Week in 2023. So here's an image here. I'll let you make your own interpretation as to whether you like this vehicle. But it looks pretty sleek, old school looking. I mean, if you were to compare it to like the Tesla, truck, I'm interested to hearing what your perspective is. And what's unique is there's going to be other companies like Ford, Workhouse, and Lucid Motors that's going to be there. One of the things I really like about this truck is that it can charge from 0% to 80% in 1.2 hours. That's just huge, because when I think of electric vehicles, it takes like many hours, like almost like 8 hours to charge. Given that it's only an hour to get up to 80%, I think that's very efficient when you think about it. So overall, when we look at price, in fact, I actually bought more Mullen shares today as it went down. And why did I do that? Because I really believe that Mullen has potential here, and being able to buy low, bringing my dollar cost average down, I believe that eventually it'll go back up, and then we'd be able to take advantage on gaining on positive proceeds. So there you have it. I hope that this video added value in that I was able to give you a perspective on both Lucid and Mullen Automotive. Overall, I do think that these two companies have a bullish potential in the coming year, right? It has a story told here, and I like the patented technology with these two companies, although we do see risk implications with its financial program. However, most companies to date right now are in that similar dilemma, and what really will separate these companies from other companies is how the company is able to execute at a low operational expense. So overall, I hope you enjoyed this video. Please make sure to hit the like, leave your comments down below, and thank you for stopping by to watch another episode here at All I See Is W. Thank you.